All right, what's up, guys? Welcome back and happy Monday. Hey, what's up, Miss Lorna? Good morning, good morning. All right, y'all, it is the final month of 2024. And if you follow JC's got a rule for a Friday. The rule is you don't lose your ass on a Friday. I'm going to double down on that rule. Don't lose your ass during the month of December. If you had a good year, even if you haven't had a great year, you don't want to go and dig a deeper hole. If you had a good year, you definitely don't want to give it all back. So protect thy behind in the final month of the year. But all right, jumping in here, checking out the rankings and the squeeze watch list. Couple changes here on the sheet. Beforehand, I was taking the scores from the weekly, the daily, the 4-hour, the hourly, and the 30. But then I'm thinking over the weekend, I trade 3-day squeezes, I trade 2-day squeezes, I trade 2-hour time frames. All right, so now I'm taking that total score from 8 different time frames, and the best possible score is a 120. 120 for the Bulls and a negative 120 for the Bears. So checking out the indexes, the S&Ps have the perfect 120. We got the Dow with a 116, the IWM with a 109, and the QQQ with a 108. So for the most part, the Bulls have got control there. It is their market to lose. Looking at the big boys, Apple's got a 116. Amazon looks really good. Netflix, Tesla, and Meta shaping up decently. Nvidia a little neutral. And one thing I do notice is a few of the softer parts of the market, they do happen to be in those SMH names. Look at the sector rankings. SMH gets a negative 15. Now, like I mentioned, the weakest possible score is a negative 120. Therefore, if I'm looking for a really good short, a negative 15, it's not that great. If I want to buy something, I'm going to avoid a negative 15. But I think for now with the SMH names, it's a lot of hurry up and wait. I don't got too much to do over there. In comparison, the XLY, communications, utilities, industrials, Bitcoin, financials, even the ARK ETF, a lot of things are shaping up pretty good here. So into the final month of the year, knowing anything could happen, the market being the market. At the moment, I think the Bulls have got control. Now, a little food for thought here, bigger picture. Bigger picture versus a shorter term. And I think Sammy showed you guys this chart a few times in the Essentials room. Let me grab my targets here. Right, so bigger picture versus a shorter term. Bigger picture, if anything, good to know that we had this big monthly squeeze, fire to the upside, and a lot like a 15-minute squeeze, a 30-minute, or a daily squeeze. A good squeeze tends to take price from your 21 EMA into that 2.5 to 3 ATR target. Think of that like the easy part of the move. One good example as of late would be that weekly squeeze from Bitcoin. They break it out, they fire the squeeze. Bitcoin takes off like a bat out of hell. Come on, Bitcoin, don't be shy. All right, really, really big weekly squeeze, fires to the upside, takes price right towards that 3 ATR target. All right, you're pumping, you hit the target, and now you're getting a lot more back and forth. Pretty common, if anything. So yeah, food for thought. When you look at the monthly chart of the S&Ps, without thinking about, can we go higher from here? Do we pull back from here? In terms of the ebbs and flows, we've probably seen the easy part of the move. Right? I would argue bigger picture, we're closer to the tail end of that move. So we're maybe somewhere back here. Big monthly squeeze fires. You get a really good push. At some point you're getting a little closer towards the tail end. Right? They could keep on pushing it, and as far as a few levels here, my thinking would be in the short term. If they can keep it above the 6,000 strike, there might be room for a push into 6,100. If you follow Spot Gamma, we do have the call wall all the way up there at 6,100. But the point I'm trying to make is, again, bigger picture. I think we're closer to the end of the move than we are to the beginning. That all being said, you look at a few charts like, your Apples, your Microsofts, your Metas, even in your Nvidias. They have these big weekly 3-day, 2-day squeezes setting up. In the event they do fire to the upside, that can definitely keep the market going. Exhibit A would be Apple. And I'm not telling you that the weekly squeeze for Apple will fire to the upside. But you think in terms of if-then statements. Apple is a huge, huge piece of the puzzle. They fire the weekly squeeze, they break it out. I think Apple's heading into 245, 250. During that push, that's going to be a good thing for the S&Ps, a good thing for the QQQ. It's just one name, but it could help the market keep pushing. I don't think as clean as Apple, but Microsoft's got this big weekly 3-day, 2-day squeeze. You run a few scans for bigger time frame squeezes. A lot of things are setting up. If they do fire, that can definitely keep the market going. But all right, let's get working through a few of the key names here. Back to Apple we go. And we started buying some Apple back on November 7th, which for a guy like me feels like about a year ago. The other thing about this trade, which it's not what I usually do, very typical for me is if I'm buying calls, I've got the perfect setup, I've got a really good entry, and then, most importantly, I have really good multi-time frame alignment. Meaning I might buy Netflix on the hourly squeeze. But what really gives that 1 hour squeeze a lot of edge is if the weekly chart, the daily chart, the 4 hour, the 15-minute, the 5-minute, everything surrounding that one time frame aligned for a push higher. That wasn't the Apple trade back at the beginning. We bought it on that candle. Now, at that point, Apple had a pretty good-looking weekly squeeze. Again, the missing component there was a better-looking hourly chart, a better-looking 4 hour, a better-looking daily. The progress they make last week is now we're getting much better alignment in the context of a weekly 3-day, 2-day squeeze. The daily chart prints a buy signal, the 4 hour chart prints a buy signal, the 2 hour, the hourly, the 30, and the 15. So good progress last week. Now we do find ourselves at a pretty interesting spot. The previous all-time highs around that 237. So a couple things I think about here. Now, for one, selfishly, let me show y'all what I got. I'm playing the January expiration, and I've got the 240 calls, and I got a few of the 250s. So selfishly, as far as my bank account, I would love the immediate breakout and the immediate push into 245-ish. What I can allow to happen would be a rejection up here at 237. And then maybe even a little bit of a kickback. They can't get it back under 230. Back under 230, that whole push off that daily 21, that whole push off that daily squeeze, in the short term, all kind of to do for nothing. The push gives them progress. The progress puts those bigger time frame squeezes in a better position to fire long. Above 230, I think they're keeping a bulk of that progress. Back under the 21 EMA, back under the 50. Maybe one day Apple breaks out. In the short term, it's too much of a give back. Back into 235, 232. I might even look to buy a few more. But we're looking for Apple to break out into 245, 250, and we're playing that through the January calls. And then real quick, one thing I did like last week was the 3-day squeeze and the 2-day squeeze. They're finally getting that blue arrow, which in most cases means if they can get the MACD back above 0, pretty good chance they're trying to shape up for a breakout. All right, so one name we're long right now would be Apple, and then the other one would be Starbucks. You have Apple at 230, and then you have Starbucks at $100. If they can keep it above 100, I think a lot to like here. Good-looking daily squeeze, fresh momentum cross, 2-day squeeze, a 3-day squeeze, and an ample amount of buy signals. They keep the ship above $100. I think they want to take it into 104, 105-ish. And I'm going to target that 105 call wall. Again, you're making progress back above a really important level. They can ruin all the fun here with a push in the close back below $100. Not what I would like to see. But above that, I'm going to hold those calls and looking for a move higher. The other trade we have open, which has not been a great one, but we'll see if she fights back. Meta. And I bought Meta right up there on that candle. And believe it or not, I might have been the last guy to buy it up there. They said, "All right, Horton got his fill. We can hammer it lower now." So yeah, pretty much from the get-go, that trade has come against us. Mentally, I'm not banking on it working. To be honest, I forgot that I had Meta up until about 5 or 10 minutes ago. But looking at it objectively, got a 3-day squeeze, a 2-day squeeze, a daily, and a 4-hour squeeze. Never mind my trade. If I were looking for a new trade on Meta, the conversation would have to start back above 580. I don't love the combo of momentum breaking, a daily squeeze, 21 below the 50. I think they can put a short-term Band-Aid on that, and then maybe try to rebuild back above that 580. Get her back above the 21, get her back above the 50, stabilize it, try to get a few more buy signals coming through. It might be a week down the road. It might be 4, 5, 10 weeks down the road. If they ever take out the call wall at 600, I think pretty quickly Meta's headed towards 620, 625. It reminds me a lot of Netflix back at 700. Big push off the bottom. Can't get through. They try again. They try again. They try again. When the day came that Netflix finally got above 700, that ultimately kicks off a $200 move higher. But those are the 3 open trades. And then looking at the rankings, right, I'm not too interested in Broadcom, TSM, Google. Let me show you Nvidia real quick. It is a big one. Nvidia's in an awkward little spot right now. Nvidia gets a couple of closes back above the 21. They can stabilize it. They can get some buy signals. Then they can work on a push back into 150. Nvidia goes getting a couple of closes below the 50 SMA. No bueno. I can sit here. I can look at it. I can mark up levels. I can have conversations. Or I can look at my sheet. And the sheet says on my favorite 10 names, 1, 2, 3, 4, 5, 6. 6 of them grade out better than Nvidia. Nvidia's just got a 40. I can look at the overall bigger picture watch list. Look at all the things here, guys, that grade out better than a 40. S&Ps, Citigroup, Shopify, Apple, Dow Jones, Goldman, Home Depot, Costco, Walmart, Amazon, Dow, UNH. There are 59 names that grade out better than Nvidia. And I love Nvidia. My highest P&L name all year long by a pretty long shot is Nvidia. I think my gains in Nvidia are about maybe 5 or 10 times bigger than my second place name. But I'm not going to force the issue in Nvidia if I don't have a good setup and a lot of edge. So I'd watch the daily 50 and I'd watch your daily 21 and then recognize the fact that trying to trade it directionally in between the two, in my experience, not the easiest game. Think back here. We're below it. We're above it. A lot of BS. Wait for a clearer move. Wait for a little more clarity. Then the trade becomes much, much easier. All right, so we should be looking at Apple, which we looked at, Amazon, Netflix, Tesla, Meta, and then I think I would cut it off there. All right, Amazon, Netflix, and Tesla. Apple 230, Starbucks 100, and Amazon at 200. Key over under levels. And the game plan that I would work here on Amazon is a pretty simple one. Anywhere above 200, I want to buy it on a good-looking lower time frame squeeze. Could be a 15-minute, could be a 30, could be a 1 hour, 2 hour, 4 hour. It's going to catch a little gap up here this AM. But I want to look to buy it on things like this. It doesn't have to be the hourly. But I don't want to jump in back here when you've got, crappy momentum, crappy structure. Let them get through that cycle. Then they rebuild. Then they get momentum. Squeeze, buy signal. At the open, that squeeze is taking you up to 210. If you bought it on Friday, you can cash out here at the open. So I think I might have missed the initial push here to kick off the week, but I'll keep on looking for spots like that. And then next up is Tesla, which I believe is gapping up a few bucks. Tesla into 352-ish. All righty. Couple of levels I'll give you. We'll call it 315 and then 360. 315, of course, being your 21 EMA. Bigger picture, I don't think it dipped down to 315 would be the end of the world. They gap it up into the election. They pump it. And now very, very normal action. Little back test, a little break in the action, a little consolidation. Below that 21 EMA, I think it's in a little trouble. Above that 21, you're looking for a move initially into 360. 360 being the call wall and the short-term high. Above that 360, that's where I think Tesla really heats up again. One thing you could watch here this week would be the brand new 4-hour squeeze. What I would like is let that 4-hour squeeze get another couple of bars in compression. Right, let it build up a little more energy. And then, you're playing it into 360 and potentially through the 360. And we will wrap it up here with Netflix. So 2 things to consider. One of them being on the weekly chart here for Netflix. The squeeze has pretty much gotten the job done. Okay? The easy part of the move from that 21 EMA into your 3 ATR extension. This one actually got you a little bit higher. An overachiever. Does not mean Netflix can't keep on trending higher. It could go to weekly 4, 5, 6, 10 ATR. But, probabilities-wise, that's a part of the move you want to play most aggressively. Anything above that 3 ATR is a cherry on top. So consider that, and then also consider we do have the call ball here, I believe, at 900. Netflix call ball, $900. Right, so until we're closing above 900, that could continue to be a brick wall. The trade I would look for here, it's a very different trade than Apple. I'm buying Apple going back about a month ago, and I'm giving that trade, 60, 70 days till expiration. Playing it off that bigger time frame weekly squeeze. Bigger size, more time till expiration, all the above. What I'm looking for here on the Netflix. And hey, if they can get Apple into 245, 250, this is kind of the transition I'll make. Aggressive, more size on the easy part of that move. Catch that wave to my upside target. Then transition over to, all right, if Netflix can give me a really clean 30-minute squeeze like back here, and we're about $20, $30 below that call wall, hey, I'll jump in, I'll play for a push, take it into the call wall, cash out, move on to another idea. Right? I'm looking for a quick hit. I'm not looking for week after week after week of that strength. You can call for that in Netflix if you're calling for it all the way back there. At the moment, that's what I'm trying to get from the Big Apple. So differences in the game plan. But there you go, folks. That is what I got for you this morning. It is a bull's market to lose. But yeah, if y'all got any questions, anything you want to take a look at here, drop it in the chat, and I have got you covered. One more for you real quick, the Bitcoin. Right now, ever since Bitcoin hits that 3 ATR, $100,000 target, it hasn't collapsed. It hasn't fallen apart. But you're no longer getting that easy wake up, make money every day kind of action. You tend to get that into these bigger targets. Then to get there, everything takes a breather. So what I'm looking at here for the Bitcoin, we haven't pulled back and touched that daily 21 EMA. But one beneficial thing about the chop is, think back here. Yeah, we are very strong, but we're also very far above our 21 EMA. That kind of action, it's fun while it lasts, but again, it's not sustainable. With that break in the action, choppiness gives you is enough time for that 21 EMA to rise up, and now you're not too far away. Now in the short term, you're working with less of an overbought market. A little easier to work with. I want to play it again, and what I would look for would be anywhere above 9DK. Not 9DK daily 21. Anywhere above that, I want to scoop it on a good-looking lower time frame squeeze. Brand new 4-hour, not too much work in there. Nothing at the moment, but that'd be the game plan. But all right, let me get caught up in the chat, see what you folks have got, and then I got to jump into the mastery room in about 10 minutes here. Hey, what's up, Scoop? Good morning. Yeah, I covered Starbucks, but we'll take another look here. I like the trade. I like the setup. Really, as long as it can keep it above $100. They try 1, 2, 3, 4, 5. They try a handful of times. On that good, strong candle, they finally get a little oomph going. That candle looks a little more serious than all the previous attempts. Above $100, I think they keep that progress. The progress being they fired a daily squeeze, they crossed momentum in the favor of the bulls, they got a bunch of buy signals. If they can keep that above $100, I'm looking for a move into 104, 105-ish. We have the spot gamma call wall at 105, so I think anything into that level would be the easy part of the push here in the short term. 1 or 2 closes back under $100, and I might have to let that one loose there, Scoop. SMCI target today. Admittedly, not one I watch all that often. Although a $6 gap up, nothing to sneeze at. The level I'll give you today, not even a target, but more of what could be a turning point for the Bulls or the Bears. Watch the falling daily 50 SMA. Emphasis on it's a falling 50 SMA. Meaning what? Meaning we're bouncing in the context of a downtrend. If Netflix pulls back, 21 above the 50, 50 above the 200, they're all pointing to the upside. Signs of a good quality uptrend. So point being on SMCI, it's a different kind of bounce. It's a counter trend bounce. On these counter trend bounces, you want to mark up your 21 EMAs, your 50 SMAs on a gap into about $38 per share today. That's going to take you a little bit above that daily 50. I'd watch that as a major level of interest. If they can't keep it above it and they close back below it, then hey, maybe a lot like the pop back here. Maybe it's just a pop into falling resistance. They keep it above the 50, and then they go on to close it above that for a few days. Maybe you're looking at more of a turning point here for SMCI. I would keep an eye on that level there. Really, whether you're bullish or bearish. Hey, good morning, Mike. Good morning. Good morning. Mike watching some Intel. Going back to SMCI, and sometimes it can be a really slow process. All right, but all throughout back here, you're below your falling 21, you're below the falling 50. The work they've done over the last 2-3 months or so is just stabilizing price. So now they're above the 50, and they're trying to turn the 50 higher. They're above the 21, trying to turn that 21 higher. Pretty good signs of, that might have been all she wrote there as far as the flush. It could be a slow process, but it's a process nonetheless. Hey, good morning, Joe Schmo. Good morning, GR. How do I define my ATR targets? Daily ATR, intraday? Yeah, really good question. So the easiest thing to do would be just grab some Keltner channels. Throw some Keltner channels on your chart. And what I do in most markets, I'm looking at a factor of 3. Factor of 3 meaning we're going to measure 3 average true range moves above and below the 21 period exponential moving average. So if we go here now. So we got our Keltner channels measuring 3 ATR above our 21 EMA. And now really regardless of the time frame. So for example, if I'm going to trade Intel on the 5-minute squeeze, what I found with the squeeze is the easy part of the push is going to be the move from your 21 EMA into that 3 ATR extension. Build up the energy, release the energy. We're usually good for a good, 2.5 to 3 average true range moves above or below that 21 EMA. So if the focus, the setup at hand is a 5-minute squeeze, I'm taking the extensions from my 5-minute. If I'm trading the 2-day squeeze here for Intel, well, now I'm taking that 2-day time frame 3 ATR extension. All right, I'm going to buy it near my 21 EMA. I'm going to play for a push into 28 and change. And doing that makes the trade, what I would call pretty universal. I could be buying options. I could be doing a futures trade. I could be buying shares. It could be a 5-minute time frame for a day trade. It could be a monthly chart for a swing trade. As the time frames trade, as the time frames change, the speed will change. But as far as entries, exits, targets, execution, it's pretty much the same song and dance. So I'm going to trade that 30-minute squeeze on Netflix. Same exact way I would trade a weekly squeeze on Apple. All right, I'm going to wait for my white arrow. I'm going to try to fight for a good entry right near that 21 EMA. And then I want to catch that push into that 3-ish, 3 ATR level. If the thing ends up going 4, 5, 10, 15 ATR, you know what? So be it. I think I can make a good living catching the higher probability part of that move. Now, the way that I visually get my targets is through these green and these red lines. And those just line up with those Keltner channel extensions. Hey, Mark, thank you, my friend. Same to you. Same to you. But all right, folks, I got to let you go here. Got to go jump into Mastery and take those folks through the open. And then I think right after that, I got a session in the Essentials room. So we are cranking on a Monday. But all right, y'all, kick it off in a good fashion today. let's finish up the year on a high note. As always, I appreciate your time and effort. And let me see, today is Monday. So yeah, I'll be back same time, same channel on Wednesday.